Hello and welcome to Big Deal. Today we have with us the co-founder of Everstone Group, Sameer Sain, joining us straight from Singapore. Sameer, so good to have you on Big Deal. How do you want to be addressed here? A big restaurateur, since you have so many restaurants in your portfolio, or maybe a big real estate developer, or just a pure play private equity player?
Just Everstone Group is good. I don't think in India we need very box definitions. You know, it's an organic place and there's a lot to do, so we try and do the best we can.
Right then, let me begin by asking the large transaction that you have just closed. You formed a joint venture with CPPIB of Canada for developing logistics parks, industrial parks. Give us more details on how much of money will really flow in and what do you intend to do?
Look, I think, we have a business called Indospace. Indospace is the largest owner, developer, manager of warehousing and light manufacturing, largely logistics facilities across India. We're a national developer. And we've been doing this for a few years and very quietly and kind of building it behind the scenes. What this joint venture does is that we partner with CPP, where CPP is the majority, in a new vehicle called Indospace Core. Indospace Core then acquires the ready, fully leased facilities that we have within Indospace development. They also commit to buy all the developments that are currently under construction. As soon as they're fully developed, as soon as they're fully leased, they will move into Indospace Core. In addition, that frees up a lot of capital for us, and we'll raise some additional capital, and we will go and develop further greenfield development. So this is a very large transaction. It's a massive commitment for CPP. It obviously is a very large transaction for us, and it runs into, if I look at the entire series over the next many months, into north of $1.5 billion.
So it's a large transaction with a substantial amount of logistics parks under your belt in this particular joint venture of Indospace Core. So Sameer, what is going to be the end game as an investor to really do value unlocking and for the returns going forward? Are REITs and InvITs, which are the hot topics right now of discussion, some of the InvITs have already come into the market. Is that going to be the end game for value unlocking for you as an investor?
Look, there are many options. I don't think too much about the end game when the opportunity set is significant. I think, once REIT legislation becomes a little clearer and maybe a couple of people lead, this becomes something that definitely is a possibility. But there's nothing wrong with just owning ready assets that are leased, that provide a very good income with extremely high quality tenants, and especially in an environment where with a lot of movements like GST, Make in India and others, create good momentum in terms of leasing and high quality tenants that usually sign up for very long-term leases. So we're very happy with the income. We're very happy if the REIT legislation comes in and we take this business public. Either option.
So give us more sense about this large transaction. So $500 million will first come from CPPIB in buying the complete projects, and how will it take it forward, and what is going to be the final targeted amount of or the million square feet of logistics park that you are looking at acquiring under this joint venture?
So the new vehicle, which is the joint venture in which CPP is investing, the first tranche of this is to buy our existing ready, fully leased assets. So that's around 12 million square feet across the country in 13 or I think 14 different developments. So that's the first tranche, which is $500 million. The second tranche is as our assets that are under development across the country again get ready, they will move into Indospace Core, or at least Indospace Core has the option to buy them. Look, those numbers are floating, but bottom line is it's probably a little over 20 million square feet, which, we would value depending on what the value is, but I think call it $700 or $800 million. And then there is a entire new greenfield development that we undertake to develop another 20, 30 million square feet across India. So I expect the whole package to be about 50 million square feet, of which probably we are 25% of the way there in terms of finished and ready assets. But we're well on our way. We have a national infrastructure. We are good at what we do, and I think that we've been able to execute this business in a reasonably good and fast manner.
Can you give us a timeline of the targeted 50 million square feet of logistics park in this joint venture?
Yeah, it's like asking how long is a piece of string in India. We have no idea, but if I look at by a historical track record, generally I would expect this to be hit in the next sort of 5 to 7 years. We should probably get to at least 35 million in the next 36 to 48 months.
So, Sameer, with this large investment that you have lined up for the logistics park, now we know that distribution channels are going to be extremely important under the GST regime, which is the buzzword right now. So, is that what you're trying to capitalize on?
Look, it's timely. I think there's three pillars that I think help us in this environment. In no particular order, I think the fact that the government's done an exceptional job in building roads across India. And I think people haven't talked about that a lot, but road infrastructure, especially connecting major cities, has improved, continues to improve. Road construction continues to be at a pretty record high. It's hard to create a lot of interstate transportations of goods and services without having suitable infrastructure on the logistics and warehousing side. So I think we've benefited from that. The second thing is GST. If you look at the universe that we live in, it's been very complex. You have hundreds and different minor tax jurisdiction, octroi limits, and what GST will allow is a more uniform tax code where people can actually then rationalize their logistics. So, for example, a typical consumer business that's of scale will have hundreds of go-downs or small warehouses across India outside various octroi limits. With GST, they can move towards a more Western model, which is actually very sensible, which is mega warehouses in specific areas and then use those to rationalize all these different tiny warehouses they have. Now, the truth is those mega warehouses don't exist anywhere in the world, anywhere in India specifically. And we're probably one of the few, if not the only, that actually develops and manages these warehouses. So that plays into us, into our business quite well. The third is Make in India. Not only do we do warehousing, we also do light manufacturing within our industrial parks. And so we've seen a pickup in, things like auto components or assembly, a few other things that I would regard as just light manufacturing as opposed to heavy industrial manufacturing. So that's a third theme. So, I think the timing has been good for us. I don't think we foresaw all this when we started the business. Luck is important, and I think hopefully this momentum continues.
So you've been lucky, and no one's complaining about that.
Yeah.
But let me ask you about another offshoot of your, development that you have done under Everstone Group. You've built malls in the past. Real estate was one big thrust area for you. So is that also on the table? Are you still going to develop more real estate?
Look, we built a lot of malls. I think we were early. Before retail really opened up for foreign retailers and for foreign multi-brand and single-brand retailers. And I think we struggled. It was a tough thing for us. Having said that, we invested in a total of 17 malls. We built 11 ourselves from scratch, leased all of them, managed all of them, and actually have, as of last week, sold all of them. So we actually don't have any more malls. We've actually sold all the various malls. It wasn't a great outcome for us. I think it's going to be a great outcome for the people who bought them and are now benefiting from the upswing. People like Phoenix Mills, who've done an outstanding job, and I think will continue to do an outstanding job. So I think it's a good time to be a mall owner. It probably wasn't a good time to be a mall owner 5 years ago.
All right, so that was Everstone Group's the overview when it comes to the infrastructure real estate space. But Sameer, stay on with us. When we return, on the other side, we are going to talk about another hot topic of discussion, another hot area, which is financial services area. And Everstone Group has a fair bit of investments there as well. So we'll focus on that when we return on Big Deal.